the ICT concept indicator, which has been provided by the TradingFinder website for various platforms. From this section, you can download the indicator file for MetaTrader 4 and MetaTrader 5 platforms and run it on your chart. Additionally, traders can read this page to learn about how the indicator works and its functionality. From the navigator section, we select the indicator file and run the indicator by dragging the file onto the chart. Once the indicator is loaded onto the chart, a panel appears on the chart where we can enable or disable the various ICT concept statuses. This indicator, by providing various modes and based on ICT concepts, displays trading opportunities for us. At the top of the panel, there is a minimize option. By clicking on this section, the panel shrinks to its minimum size, and only the remaining time until the current candle closes is displayed. By clicking on this section again, the panel returns to its default state, and by clicking on the panel, we can move it around the chart and place it wherever we want. At the bottom section of the panel, there are various statuses, including the display status of zigzag lines, order block zones, breaker block zones, FVG, IFVG, BPR, Killzone areas, and finally, market structure. In this section, we can enable or disable each of these features. By enabling the zigzag lines, a zigzag indicator with a 5 to 3 -3 period will be displayed on the chart. ICT-style traders can use this feature to analyze price behavior and market movement, and to conduct their own analysis directly on the chart. The next section is related to order blocks. By enabling this part, the order block zones will be displayed for us. Order block zones are areas where smart money has placed their orders, causing a strong price movement. Traders can enter buy or sell trades in the market when the price returns to these zones. Bullish order block zones are displayed in green, while bearish order block zones are shown in red. For example, in this section, a bullish order block zone is shown, with the price moving upward, and then pulling back to this zone, we could have entered the buy trade. After that, we see the price sharply moving upward and starting a bullish trend. Also, in this section, another bullish order block has been identified and its zone is marked on the chart. After the price moved upward, with the price returning to the zone, we could have entered another buy trade, and once again, in this section, the price moved sharply upward. Also, here there is a bearish order block, and after marking this zone, the price moved downward. With a pullback to this area, the market entered a downtrend, and here as well, we could have entered a sell trade. There are also other examples of order block zones and price reactions in this section. The next section is related to breaker blocks. By enabling this option, it displays the zones of broken order blocks for us. These zones are formed as a result of liquidity grabs or changes in market structure, and after an order block is broken, a breaker block zone is drawn. Here there was a bearish order block, and after it was broken, a bullish breaker block was formed. If the price returned to this zone, we could have entered the buy trade, and as we can see, the price moved upward here as well. In another example, in this section, a bearish breaker block was formed, the price moved downward, pulled back to this zone, and then continued to move downward. Once again, the price reacted to this zone and each time entered the downward trend. The next section is related to FVG, which by activating this part displays the FVG or fair value gap zones on the chart. The bearish FVG zones are shown in red, and the bullish FVG zones are displayed in green. FVG zones are a 3-candle pattern in which a price gap is formed based on the distance between the first and third candles, and we identify this gap as an FVG zone or an area of imbalance in the market. These zones act like a magnet that attracts the price to themselves in the future, and eventually the price reacts to them. You can see an example of its bearish trend here. A bearish FVG zone where the price has reacted to it 3 times, each time entering a downward trend. The next section is about IFVG, or inverse fair value gap, which shows us the FVG zones that have been broken. For example, here we had a bearish FVG zone that, after being broken, turned into a bullish IFVG zone. The bullish FVG zones are marked in red, and the bearish FVG zones are marked in green. You can see various examples of IFVG here. The next section is about BPR, or balanced price range, which is formed from the overlap of 2 FVG zones. BPR zones are created from these overlaps. Here we had a bearish horizontal zone, and as the price moved back up, a bullish horizontal zone was formed here as well, and based on the premium and discount zones we can identify the BPR zone. Here the BPR zone has been identified from the overlap of this bearish horizontal zone and the bullish FVG zone, and it has been drawn on the chart. We can use it as a support or resistance zone. Bullish BPR zones are marked in green for us. Bearish BPR zones are marked in red. And finally, BPR zones that the price has crossed 3 times are shown in blue. Here we had a special bearish zone. After that, there is a special bullish zone that identifies and draws a bullish BPR for us. And finally, as the price moves down through this area, a bearish BPR zone is formed again. The next section is related to the Killzone. By enabling this section, 3 Killzones Asia, London, and New York are displayed, with the Asia zone in purple, the London zone in blue, and the New York zone in pink. By enabling the Killzone area, traders can identify key time intervals in financial markets where the highest volatility and trading volume occur. Based on these zones, we can spot suitable trading opportunities and enter either a buy or a sell position in the market. Additionally, ICT-style traders can use the Killzone areas to apply ICT strategies. For example, they can enter a buy or sell trade in the market using strategies like Judah Swing, Silver Bullet, or based on the OTA pattern. All of these indicators can also be downloaded from the website, and you can use them to enter buy or sell trades in the market based on these trading strategies, thereby increasing your trading win rate. The next section is related to market structure, which, when enabled, displays the market structure for us. Market structure is a model for analyzing price behavior and identifying movement trends in the ICT style, which uses the concept of market structure for a better understanding of the market and for setting up trading strategies. Here we can see an example of a charge, or change of character, where if the price moves upward and breaks this level, a change of character is formed, indicating a trend reversal in the market. Also, in the lower part, the BOS or break of structure level is shown, which, if broken, indicates that the price is continuing its current trend. At the moment, we are in a downtrend, which has been confirmed here, and a bearish change of character has been broken. In this section, with the price moving downward, it has performed a change of character for us. With the pullback upward and the subsequent price drop, a BOS has occurred, which is a break of structure. If the price continues in its trend, the lower level here, since we are in a downtrend, the bottom is considered the downtrend identifies the liquidity level for us. By drawing this level and with the price moving toward it, it indicates the collection of liquidity, stop losses, and the money of retail traders. As the price moves into this area, it gathers liquidity and then continues its movement. We can also observe the IDM or inducement level, where inducement levels are considered as liquidity inducement levels in Forex. These refer to situations of market manipulation by major players such as institutional investors or smart money. These moves are made with the aim of creating a false impression of the market direction. In other words, smart money encourages retail traders or less experienced participants to take positions that are actually against the true intention and direction of the market. These levels are considered as sources of liquidity, and after these levels are broken, the price changes its trend direction and moves the other way. Here we can see some examples of this. As we can see, the price moved upward, broke this level, and then made a correction. The price moved upward, collected liquidity, and then made a correction. Here as well, the IDM level was broken, and after that, the price moved downward. Traders can use these zones to perform more specialized analysis on the chart, reduce their trading risk, increase their win rate, and achieve greater profitability in the market. In the settings section, there are options that include setting the number of candles for identifying and displaying different parts of ICT concepts, which is set to 1000 candles by default. For example, by default, it is set to 1000 candles, meaning it moves backward from the last candle and displays up to 1000 candles for us. These 1000 candles are shown to us based on a vertical line, which marks the point from which the calculation and analysis of the candles in the market begin. In the next section, there is the last blocks option. For example, here I activate the status of the order blocks, and by enabling the last blocks option, it only displays the last 3 zones for us. That means 3 bearish zones and 3 bullish zones, provided that 3 zones exist for us. Here we can see that 3 bearish order block zones and only 2 bullish order block zones have been identified and displayed on the chart. And if we activate the FVG mode, only 2 bearish FVG zones and 2 bullish FVG zones are displayed for us. The next section is related to untested. And by enabling this particular section, it clearly displays the zones that have not been thoroughly tested or effectively consumed by the price, meaning all the distinct zones shown here are considered genuinely fresh and completely untested zones. When the price reaches these specific areas, there is a higher chance of a significant reaction. So traders can effectively use these zones as strong and reliable areas in the market to enter a buy or sell trade position. Well friends, we've now reached the very end of this comprehensive indicator tutorial. We would be truly happy if you could share your valuable comments and insightful suggestions with us in the dedicated comment section below.